Good day everyone, thank you for joining me. I'm Tamara Kukshinovich and I'm going to take you through Vukile's year-end results. The group is diversified across geographies and has exposures to Southern Africa, Spain and the UK. Listed investments include Castellana Properties, Atlantic Leaf Properties, Fairvest Property Holdings and Gemgrow Properties. The group's shareholding in Castellana Properties is worth 526 cents per Vukile share. The shareholding in Atlantic Leaf is worth 94 cents per Vukile share, and the stake in Fairvest and Gemgrow are worth 43 cents and 14 cents per Vukile share respectively. The South African property fundamentals are deteriorating because of the depressed economic environment and the lack of growth drivers. The UK is facing tough trading conditions and there is a lot of uncertainty due to Brexit. On the positive side, property fundamentals in Spain are improving significantly, following the extended recovery after the double-dip economic crisis in the preceding 6 years. Capital values and rentals have substantially increased and haven't yet reached prior crisis levels. The group declared a year-end dividend of 103.38 cents per share, reflecting a 7.5% growth. The forward dividend yield of 10.5% is above most peers and the sector average of 9.7%. The loan-to-value ratio of 37.2% is above the target of 35% and in line with peers that have an average of 36.6%. The group's see-through loan-to-value ratio is 38.8%. The Spanish assets account for 45% of the total property portfolio value and trading on a small premium to net asset value. We recommend a neutral exposure relative to the SA All Property Index. There has been significant growth in assets in the Spanish portfolio. The group made 5 retail acquisitions for a total of 564.4 million euros, which strengthened the portfolio. Property revenue increased by 40.3% to 2.8 billion rand and by 3.4% on a like-for-like basis. Net profit from property operations, excluding the straight-line income adjustment, grew by 43.2% to 1.9 billion rand, where Castellana contributed 36%. Finance costs rose by 38.6%, mainly due to the new debt of 600 million rand to part fund the acquisitions made. Net profit available for distribution increased by 29% to 1.7 billion rand. The board declared a year-end dividend of 103.38 cents per share, and the full-year dividend rose by 7.5% to 181.48 cents per share, which was in line with guidance. Total assets amounted to 35.1 billion rand. Direct property investments had a value of 30.5 billion rand at year-end. Net asset value increased by 0.8% to 2,026 cents per share. Total debt amounted to 13.2 billion rand, increasing by 6.2 billion rand. Net debt rose to 11.8 billion from 5.8 billion rand. The average cost of debt decreased to 4.5%, with 95.7% of interest-bearing debt being hedged. The debt maturity profile increased to 3.9 years. The loan-to-value ratio increased to 37.2% from 28.2%, which is below the covenant level of 50%. The interest cover ratio improved to 6.1 times, which is well above the covenant level of 2 times. In conclusion, we would recommend a neutral exposure relative to the SA All Property Index, which has a weighting of 4.4% in Vukile. If you would like to place a trade, please speak to your financial advisor or contact the dealing desk. A comprehensive investment idea on Vukile can be found on the PSG online trading platform. Before we end off, please take note of the following disclaimer. Thank you.